All right, in Chapter 2, we're going to cover principles of accounting for and financial reporting for state and local governments. And in this chapter, we want to be able to explain the nature of there's three major activities of state and local government. There's governmental activities, business type activities, and fiduciary activities. And as part of the components of GASB's integrated and reporting model, we're going to cover the definitions of fund, principles of fund accounting, which is a good bit different than what you're used to. Not too bad. The types of funds in each category, and of course talk about major fund accounting. There's three different activities of government. There's state and local government. There's governmental activities, business type activities, and fiduciary activities. And we're going to cover the activities that are in these. First, though, we want to talk about what's the definition of a fund. A fund is a separate fiscal and accounting entity, as I think I talked briefly about in Chapter 1, where each fund has its own self-balancing set of accounts, including its own cash account, a lot of times its own property account if applicable, its own net assets, or what you might know as retained earnings account, expenses and income. It segregates everything, as I said, the assets, liabilities, and basically, it does all this in order to satisfy regulations or restrictions or limitations, to make sure that money that's meant for the fire department is with the fire department, and the liabilities attached to the fire trucks and things like that are segregated for that purpose. A fund has its own set of books and statements, its own chart of accounts, general journal, general ledger, balance, and financial statement. Now we're going to cover the categories and the types of funds. Governmental funds, there's 5 types, and we'll cover those in chapters 3 through 6. There's general fund, special revenue funds, capital projects funds, debt service funds, and permanent funds. Proprietary funds, there's 2 types, and we'll cover those in chapter 7. There's internal service funds and enterprise funds. And fiduciary funds, there's 4 types that we'll cover in chapter 8. Agency, investment trust, private purpose, pension, and other employee benefits. Okay, first I want to cover some of the common characteristics of governmental funds. They have a focus on current inflows and outflows of financial resources. And so therefore, the balance sheet is only going to report on current assets, current liabilities, and fund balances, which is current assets minus current liabilities. There's no long-term assets or liabilities reported in the governmental funds. And governmental accounting also uses, this is where things get a little different, use a modified accrual basis of accounting, and what that generally means is that revenues are recorded, or inflows are only recorded when they're measurable and available to pay current expenses. And expenditures, and notice that expenditures, not expenses, it's the cost of an item. It's an expense is the amount of a cost used up or consumed during the period. We'll get more in depth on that later on. But expenditures are accounted for under the modified accrual basis when they are payable using current financial resources. As I mentioned earlier, capital assets, long-term liabilities, they're not governmental funds. We'll start talking about some of the specific types of governmental funds. There's the general fund. There's only one per government, and most of the financial transactions that are related to general government operating activities are recorded here. Special revenue funds. These are used when there's revenues that are restricted for a specific operating purpose, like building roads or bridges or running the library. and the accounting and budgeting that are done are the general fund. Debt service funds. These are these account for financial resources that are set aside to pay for principal and interest on long-term liabilities. Again, this is kind of where what we said was excluded from the general fund is put in the debt service fund. Capital project funds. These are for financial resources that are set aside to pay for long-term assets, capital assets. Permanent funds operate sort of like a trust. They're similar to a permanently restricted fund in the nonprofit world, or kind of like an endowment where the principal is not spendable, but the earnings on the principal are used to support a public purpose, like provide art for public buildings or purchase books for a library, etc. Here's a little short thing that we'll cover more about later, but there's a dual effect whenever you have a transaction for a capital project. In this example, city issues a 3-year 5% note in the amount of $400,000 to purchase a building. You have to record the issuance of the note in both the general fund and the governmental activities general journal. And governmental activities, here's where we're talking about this whole dual track of accounting, where you are reporting in two places. Where you're recording a transaction in two places. Not all transactions will have to be recorded in two places, but especially those related to budgets. You'll notice that later on we cover. But here's where we're going to record this both in the general fund. You've got 400 debit cash for 400,000 and credit other financing sources. Again, hung up on this, we're going to cover it later. Then you have to record it in the governmental activities, a government-wide journal. Debit cash, credit, notes payable. You'll notice a lot of these governmental activities in the government-wide journal is going to look a lot like what you're used to. It's the general fund and these governmental funds and proprietary funds that are going to look different in terms of the accounts that you're debiting and crediting. Here we have some additional transactions here. So when we're actually purchasing the building, the general fund entry is an expenditure. And we're going to credit cash. The debit is the $400,000 to an expenditure for capital outlay, and a credit to cash for $400,000. And again, in the governmental activities journal, again, this is going to look more familiar to you. You're going to debit buildings and credit cash for. All right, now proprietary funds. There's several types of these. First, we'll talk about internal service funds. These account for activities where goods and services are provided to other departments inside the same government for a charge. This could be printing, a print plant for a government, or a parking service, or a bus service for a government that services other departments inside the government. Again, central computing, printing. These are reported as governmental activities in the government-wide statements because they primarily serve departments that are financed by other government funds. Enterprise funds. These account for things that are for activities that are provided for goods or services provided to the general public. Electrical, utilities, airports, parking garages, bus systems. These are reported as business type activities in the government. Common characteristics that are similar to for-profit entities, including they use accrual basis of accounting. They also record capital assets and long-term liabilities, depreciation expense. They're very similar in all these ways to what you're used to in the for-profit side. Expenses are recorded, not expenditures. Their financial statements, similar to for-profit entities, the statement of net position, which is your balance sheet, statement of revenues, expenses, and changes in net position, which is your income statement, and a statement of cash flows. Fiduciary funds, these are agency funds. These account for financial resources where the government is just strictly acting in an agency capacity. It's holding money. As it says, the accounting is simple: assets equal liabilities. There's no net position. That means there's no additions or deductions from net position. There's tax agency funds and pass-through agency funds. So if there's one entity that collects taxes and holds it for another entity, that would be sort of like what happens here. For instance, I think there's a city and a state component to property taxes here in this if your business is in the city of Birmingham, but you only get one bill. And that one bill includes is payable to Jefferson County, but a portion of that is for city property taxes that they would hold in an agency account and remit to the city of Birmingham. Investment trust funds, these are external investment pools, and the assets are held for other governments along with funds of the sponsoring government. These have assets, liabilities, net positions, and changes in net positions, but it's to the equity of that affects the equity of the external participants, and those are recorded in the fiduciary fund. Private purpose trust funds, these account for financial resources, again, in which the government is acting as a trustee in capacity for private individuals, organizations, or other governments. Pension trust funds, or any other type of trust funds, are funds that hold financial resources, account for financial resources, which the government is acting as a trustee for the employees of the government for when they retire. Again, the fiduciary accounting is similar to that for proprietary funds. They use accrual basis and focus on flows of economic resources. They do have capital assets and long-term liabilities if they're applicable. And additions and deductions are recorded instead of revenues and expenses, since it's not really kind of an income and expenditure type of fund. It's an agency fund. By definition, the government is holding for someone else. So those inflows and outflows don't need to be confused with income and expenses of the general government. And they only use two financial statements: a statement of net position or a balance sheet, and a statement of changes in fiduciary net position.